Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the digital asset investor, and the market is pretty flat. A little bit of red, but not too much. Starting to turn to green. CoinPaprika.com is showing you what it is. But okay, this is an interesting little thread. eGrag Crypto. I don't even know if I'm saying that right. He starts getting pretty specific here. January to February 2023, breaking the chains. Price will pull back to 55-cent range from whatever he says above. XRP price will shoot up and break the chains of fib 70 cents to 78. March to April 20, I think you meant 2023 here. Freedom from gravity. Down here he says XRP price will break all-time high and set a new all-time high of $8.50. May to June 2023, gravity will do its best, pull back to 370, okay? But I just thought that those were some pretty bold projections. I guess you could call them predictions, but I just thought it was interesting to look at because I don't do charts. I don't know anything about Fibonacci, whatever, and all that, but it's interesting to look at, and when I see somebody put one that grabs my attention, I like it. I hope he's right. Jason Cousins from Glint, check this thread out. He's dead on the money right here, or on the gold. A 10% gold portfolio allocation belongs to the old paradigm of the last 50 years. Since the USD came off the gold standard, in this period the world has been persuaded to see gold as an investment rather than money, but things are changing. The world is at the beginning of a fundamental paradigm shift. After a 15-year period defined by low to zero interest rates and cheap corporate debt, a highly possible stagflation crisis and potential systemic collapse that has already started will catalyze this paradigm shift. A new macro financial system will see different investor attitudes and could very well herald vast increased interest in a gold-backed money currency system such as Glint Pay over the magic money tree model of the last 50 years. The digital asset investor just bought more gold today. Check this out. Breaking news, Russia is proposing its own international standard for precious metals after getting banned by the London Bullion Market Association. Here it comes. Folks, this whole gold thing, remember, these central banks have been accumulating for years now, and they know that there's going to be a changeover of this financial system, and it is going to involve digital assets like XRP, but it's also going to be involving gold. And I didn't say Bitcoin, I said gold, God's money. Okay, and then you got this too. All the formula is there for a mess. This is over in China because of they're having a real estate crisis and they're having bank runs. And then here's in the U.S. today, U.S. housing starts tumble 9.6% to 1.446 million in July, lowest since September 2020. This is why I'm accumulating gold, folks. Not just gold. I'm accumulating those on that CoinPaprika list as well, and I'm making sure I have a good reserve of cash. But I've got spendable gold on in my Glint account, and I'm buying physical gold. All right, check this clip out. Now this is Mark Yusko. He is Anthony Pompliano's partner at Morgan Creek Capital. He's a smart guy. I don't understand why he's always been a Bitcoin maxi. I think that he's one of those guys that kind of maybe just is talking his book and doesn't want to talk XRP. I'm kind of surprised by it, but listen to what he says because he is right about this.
You mean that?
Yeah, sure.
Yeah. How much gold do you have? Oh, you kidding me? Boomer rocks? 0. Haven't you heard this Peter Schiff guy?
So, that's not smart.
How much Bitcoin do you have? I don't want to talk about it. Why not? It's really big.
I'm going to have both. I don't have any Bitcoin right now, but I am going to accumulate some Bitcoin if the prices get lower because I think they're going to get lower. But I could be wrong.
As my net worth, I'm kind of embarrassed. How often use DeFi? Every day. So that digital divide is going to transition $37 trillion with a T. And remember, a trillion is a dollar a second for 31,710 years. 37 trillion from our generation to the echo boomers. That 37 trillion is not going to traditional assets. It's going to digital assets.
I agree with that.
Always fun, Mark, digging into the details with you, and I think a lot of to you guys.
Yes, 37 trillion, just the tip of the iceberg. Well, when I hear tip of the iceberg on this topic, it reminds me of this graphic. What others see is all the distraction, Bitcoin, Ethereum, Dogecoin, Shiba Inu. What we see is X freaking RP and some others, the quants, the XLMs, the Cardanos, the things that actually work. Okay? Then there's this from the Fed website, just like Rothschild lied about the Napoleon, what that's a reference to is back, I can't remember which war, but anyway, the story goes that the Rothschild, whoever the head of the Rothschild family was, intentionally leaked a rumor that the war had gone, I think it was, as I recall, I can't remember, that Napoleon had lost or something like that, and then basically bet against the situation, and then once everybody placed their bets based off of his false rumor, he made bank. Okay, so what? And look, this goes in the All the World's a Stage file, and as I've said, this thing could be, this SEC thing, it could be a combo of corruption and All the World's a Stage. That's kind of where I lean. The Fed is doing the same, attacking XRP to then take it over. So this is from the Federal, from the Federal Reserve website, I'm assuming. Ripple is a solution that empowers providers to make real-time cross-border payments. Cross-border payments today generally take 2 to 4 days to settle. With limited visibility into the status and fees, Ripple enables full visibility into the payment status, certainty of fees, and settlement in real time. And then here's from James Phelan. This was last night. The SEC has filed a reply brief in further support of its objection to Magistrate Judge Netburn's orders compelling the SEC to produce the Hinman speech materials. The most interesting thing that came out of this is that the SEC for the first time is referring to Bill Hinman not as director, but as Citizen Hinman. Okay? Citizen Hinman. Now that, I don't know what to make of that. When I first read that, I was sitting there thinking, is this guy being thrown overboard? Now, this is I've talked about Jim Rickards a little bit here lately. So I wanted to show, somebody had put this clip out today, and it's worth watching again. Listen, no, the important thing is Jim Rickards doesn't really weigh in, but he doesn't nod his head no. He's well aware of what Ripple and XRP is.
You can do that with dollars. Exactly. Yeah, you're right. You can do it with actually, you can't do it with Bitcoin. You pay $50 for a $2 cup of coffee, a $50 transaction fee.
You don't know what it's going to cost you in 10 minutes.
That's exactly right.
There are some cryptos that are working with regulators and are working with banks.
I agree.
Ripple would be an example.
Ripple would be an example, right.
Now, this is and I can imagine in the next 5 years, instead of us doing sterling against the dollar or sterling against yen and doing these kinds of transactions, we'll do sterling versus Ripple. And the reason being, dollar right now is a 2-day settlement. With something like Ripple, you could do settlement in seconds. And I think that there's a future there where the guy that's trading spot FX today will be trading spot FX against Ripple in the future, in the next 2 or 3 years. So I think that Ripple has a great future because it's right now supported by all the banks and by all the regulators.
And it has an elastic monetary base, right?
So if we take that and you go to the block.
Okay, I'm not going to play the rest of it. Just wanted you to see that part. So then listen to this. Listen very carefully to this. HSBC, CBDCs will be represented by XRP. The CBDC still needs to be settled, and FX all need to be interoperable amongst each other.
For example, Ripple's XRP ledger provides real-time cross-border settlements using tokens that represent central bank currencies. For example.
Okay. Now, then Gary Gensler is outlining the exact procedure for whistleblowers to follow, and then the library people who are hilarious and I think are really smart and pissed off. They said, blow the whistle, Hester Pierce. Now, Wheezy put this out today. This is one of those clips I saw, and it's a reminder of just how dirty this whole thing is. This is Joseph Lubin. Now, folks, I set it up here. I've been saying it for over a year now. The whole ETHgate thing, this was an attempt to create a monopoly in crypto with Bitcoin and Ethereum, and a monopoly on tokenization of digital assets, a monopoly on paying interest. Think about what Gary Gensler does not go after. He doesn't go after the ETH-based lending platforms. He goes after Coinbase. As long as Coinbase is only staking Ethereum-based things, they're probably fine with it. But they're not going after anything that's Ethereum-based, because that was the plan, folks. This was a monopoly attempt. The Congress ought to be up in arms. They ought to be holding antitrust hearings. Where are you, Congress? Because what this guy describes right here, especially knowing what we know about how he was behind the scenes talking to the SEC all this time, he's describing how you create a monopoly.
Matteo Leibowitz, who might be out there right now, indicated that he felt that Bitcoin had a divine distribution and that Ethereum had a divine token launch for Ether. He outlined what he called the distribution quadrilemma. His argument was that regulators have woken up, and any post-2015 protocol that wishes to achieve widespread adoption has to succeed with respect to the following 4 pillars. We're talking about layer 1 protocols here. The first pillar is the token must be issued broadly and equitably. Number 2, the community must remain engaged, vibrant, and grow large over time. One way to achieve this is by enabling the tokens held by the community to appreciate and value. Number 3, the project must bring in sufficient capital so that it can be delivered, maintained, and continuously improved. And finally, and this is the new wrinkle, the project must be regulatorily compliant.
Let me add one that he didn't mention. The project must be meeting behind closed doors with the SEC. The project must form a venture capital working group and have their attorneys write the Bill Hinman speech that he goes out and then gives Bitcoin and Ethereum a free pass for the next 3 or 4 years. That's what you must do. That's what they did.
Among all the competitors, the Ethereum killers, to have emerged in the past few years after Bitcoin.
See, now he's being condescending to all the potential competitors, and he's saying, see, I already worked the deal out, and you can't get in now because of this, the way we've structured it.
Ethereum were launched. None show convincing signs of meeting all 4 requirements of the quadrilemma. The best way to build and grow a strong community is to sell them a token and promise that it will appreciate, and then work to make it so. This is the definition of a security. Since you are now selling a security, your token won't be issued broadly and widely, and your community won't be robust. There may be novel mechanisms tried over time, but so far no projects have gained great traction. And it is hard to imagine building the world's trust foundation and global settlement layer on a VC coin project.
Well, no, I'll tell you what's hard to imagine. It's hard to imagine building this trust layer he keeps talking about when you had an ICO to start this trust foundation and you hid the disguised whales. And then you had secret meetings at the SEC to formulate this plan to give Bitcoin and Ethereum a free pass. That is no way to build a trust foundation. I mean, this is absurd. Now, this started being circulated today, this John Deaton thread from a while back. Once I think people had seen that video and it pissed them off. So I retweeted this to Congress too, and I said, antitrust, that is exactly what this is. This is an attempt at a monopoly creation. This is why we have to have investigations, because this needs to be broken up before it happens. And everybody in crypto should be pissed off. This is the reason none of these people will talk about it. None of them will talk about it. You don't see any of them, but he says, how ETH became the only game in town. We received a tiny bit more from the Hinman deposition. He sent an email to Joseph Lubin. Now, but as you go through here, there are videos that we all put together. This is when we first started working on all of this a year ago, folks. And these clips, I mean, some of these clips would really just infuriate you as you go through here. But all of these clips pieced together one by one what these people did. and it is disgusting, and it'll really make you mad. This is the one that'll make you the maddest. Watch this.
So we are big friends and fans of that organization. I think they're really understanding the space well. They are applying this thing called securities law to business in America and other places, as they have done for many decades successfully. They're identifying fraudulent projects. They're identifying obvious transgressions of securities law, but they haven't had a heavy touch, really. They've been gathering information. They've been taking some actions. They've been very clear that they understand there is this new construct, this protocol-based open platform.
So you think they get it?
Yeah, we believe they get it.
Remember, nobody in crypto thinks that the SEC gets it, except for this guy. How is that possible?
They've introduced a new construct, decentralization, into their thinking. So in addition to the Howey test, they have this new construct that they're seeing certain things in. So they consider the Bitcoin network and token and issuance mechanisms. They consider the Ethereum network token and issuance mechanisms to be decentralized, and therefore no transactions involving those particular assets are considered to be transactions of securities. They have not said the same thing about other tokens, the Ripple token, for instance, and they were clear that they were going to come out with statements to sort of assess these different tokens, and I believe they've made all the statements about decentralization that they're going to make. And so,
how does he know that?
Bill Hinman, Director of Corporate Finance, has been very clear about what you can do and what you can't do, and decentralization is a new element that they're working with.
Okay. Because that makes me so mad every single time. It's been watched 276,000 times, and I think it needs to be watched more, because this guy deserves anything that he has coming his way. He deserves justice, is what he deserves, because there's nothing right about what's going on here. So let's see. It's been watched. I don't normally do this during a video, but I'll do it. 276K times, needs to be watched 1 million. Needs to be watched 1 million. I'll retweet that to Congress too. All right, and then I'll back that up. Okay, let me see. I had one more thing now. So go figure. Coinbase can win from the Ethereum merge through its staking potential, according to JP Morgan. In other words, you can stake through Ethereum. Gary Gensler has no problem with that. You putting it all together now, folks? I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family. If you do nothing else today, go read through this John Deaton thread. How ETH became the only game in town. It is disgusting. There are so many videos that you will watch, and you will leave that thing